Everyone anticipated inflation last year when the Fed dropped interest rates, but the Fed argued that since inflation is only slightly above 2.4%, there is no need for concern. However, if we observe current events, we find that prices have significantly increased since that time. Not simply asset prices like those for homes, stocks, etc. I also mean pricing for goods and services. Due to individuals starting to work again, as the economy recovers from the epidemic, and as a result of increased expenditure, inflation in the US has increased to its highest level since 2008. The annual rate of growth for the Consumer Price Index increased to 5% in May from 4.2% in April, which was the highest level since August 2008. Because every difficulty offers an opportunity, some people are profiting from inflation even while the majority of people are suffering because of it. Is it possible to make money off of this inflation? The answer is obviously yes. Let us examine the various ways wealthy people are generating millions from this inflation. To help the YouTube algorithm, please give this video a thumbs up before we continue. By the way, nothing in this video is intended to be financial advice. It is merely meant to be educational and entertaining. Number 1. Hold realistic assets. The majority of the people are unaware that money is a commodity that trades on the market, and that its price is influenced by a variety of factors, including supply and demand. Considering a hypothetical scenario in which there are 10 houses on one side and $10 in the entire economy on the other. In this fictitious illustration, a single residence will cost $1. However, if we invest an additional $10 in this market, there will be $20 but only 10 homes, which would increase the price of homes where one home will cost $2. This is a straightforward explanation of inflation. When the economy was about to collapse last year, the Fed made the decision to inject trillions of dollars into the system to stave off a depression by issuing stimulus checks and purchasing corporate bonds. The current market's 22% of US dollars were printed in that year. Anyone with a fundamental understanding of economics could tell you that inflation is inevitable. Since interest rates were at their lowest, everybody who could afford a home at that time decided against storing cash and instead invested right away in real estate. Whatever the real inflation rate, 2.4 or 3.4%, it does not matter. Housing prices increased by 15%, and according to some estimates, even by 18 to 20%. This indicates that real estate investors made huge profits in addition to beating inflation. The best investors, however, went beyond simply purchasing homes and took out mortgages, as leverage can convert good purchases into excellent ones, particularly when interest rates were at historical low levels. Are you enjoying the video so far? Hit that like button and subscribe if you haven't already. That will surely help the channel a lot. Number 2. Debt. Many of you may have a very unfavorable perception of debt, yet debt can actually be very beneficial, particularly in times of inflation. If $1 today is more valuable than $1 tomorrow, that means I will make money if I borrow $1 today and pay it back tomorrow. 20 years ago, the median housing price was less than half of what it is today, at roughly $150,000. Because the real value of the dollar decreases annually, the same $150,000 from 20 years ago are now only worth $350,000. Guess who started borrowing all that money when the Fed dropped interest rates and started purchasing corporate bonds? The biggest corporation in the world, including Amazon, Facebook, Microsoft, Apple, and so forth, do not actually require that money. Apple currently has a cash reserve of more than $200 billion. However, it continued to borrow money because there is no reason to utilize our own funds when you can invest them in the SP 500 and earn at least a 10% return while only paying a 1% interest rate on your borrowing. Even if you invest that borrowed money at a 5% rate back into your business, you will still generate a 4% return. On top of that, you will get all these tax advantages when you borrow money. As a result, you will pay less in taxes. Any money you borrow is essentially a profit if interest rates are lower than inflation. Number 3, gold reserves. The fact that gold has always been an asset that maintains wealth, particularly during crisis, is what makes it distinctive. This is how it goes. The price of gold increases whenever the future appears uncertain. Because of the 2008 crisis, gold prices increased from $600 to $1,000 in 2007. Investors panicked and bought gold right away. The US currency may depreciate and eventually lose all of its value, but gold will always be valuable. Gold has maintained its worth from the dawn of civilization, whereas the US dollar has lost nearly 90% of its value in the past 100 years. In 2010, investors had a new bout of panic and resumed aggressive gold buying, which caused gold prices to reach a record high of $1,900. But since then, the gold bubble has burst and the economy has stabilized. Investors typically avoid purchasing gold in times of economic growth and instead place their money in assets like stocks. Because of this, gold prices frequently decline during steady, predictable periods. However, gold prices started to rise again in 2019 as the US and China started a trade war, and the pandemic made it worse. The cost of gold has surpassed $2,000 for the first time. Looking back through history, gold has always been a terrific method to profit from inflation. $1 was a lot of money in 1973, but today it hardly buys you candy. In contrast, gold prices have increased from $100 in 1973 to $1,800. But because gold is a passive investment, I'm not a great supporter of it. While stocks or real estate generate something similar to rental income, it simply stands there and shines. It is an operational asset that offers a service or a product. Why do stocks continue to rise? Because the businesses that support them are expanding. Nowadays, Apple sells a lot more iPhones than it did 10 years ago. It is therefore far more valuable today than it was 10 years ago. Number 4, cryptocurrencies. I was not sure whether to put it on this list. However, I had to do this because many people have benefited from inflation by purchasing cryptocurrency. It is risky to discuss it though. Without a doubt, the technology behind it is excellent and has a lot of potential, but because it is very risky and unpredictable in the short term because it is still in its early stages. The Fed's decision to start printing money in the last year is one of the reasons why Bitcoin has increased so dramatically. We have talked about printing trillions of dollars. Investors were like, Bitcoin is like digital gold, so let us buy some after buying stocks and homes. Invest in Bitcoin as well. A lot of people who were not interested in Bitcoin prior to the pandemic don't really remember that the price of Bitcoin was just around $8,000. The cost of one Bitcoin was only $3,600 prior to the trade conflict. When most people were not concerned, you could have made money if you were interested in Bitcoin, a fortune. But people typically became excited about something when it is covered extensively in the media. The smartest individuals, however, entered it first and have increased their wealth by 10 to 20 times since then. Number 5, stock and stock market. This is my favorite route. Stock prices may not have increased by several thousand% as much as cryptocurrency, but they are much more stable and secure. The SP 500 increased by 40% between July 2020 and July 2021. That is an incredible rate of return, especially considering that you are financing the whole US economy. Purchasing a stock in titles is equivalent to owning a portion of a business. They are also known as shares for this reason. When there is an excess of money in the economy, a business's value increases, so you see inflationary growth. Additionally, since that money is typically used for necessities and wants, businesses expand faster, meaning you are not just combating inflation, but also benefiting from it. Consider for a second, how much of those stimulus checks were used to purchase items from Amazon or Apple? If you take into account the fact that these businesses grew massively while accepting billions of dollars in loans essentially for free. And now that people are returning to work, the economy is picking up. People are spending more, and these companies are set to expand even more quickly. The secret is to keep your money in assets that are inflation hedged. Rich folks typically do not carry a lot of cash. They typically reserve a little portion of their net worth as liquid capital in case of emergencies. Consider the richest people on earth. They own a specific proportion of the companies they have built up, which explains why they are so wealthy. Their wealth increases as their firms expand. Following one of the advice we have provided, you can still benefit from inflation even if you only have a few $1,000s. The most popular videos we have on investment and frugal living practices that could potentially improve your life are included in this custom playlist that I will link in the description section for you. And now, give this video a thumbs up that it deserves, and make sure to subscribe if you haven't already. Thanks for watching. See you all in the next one.